Good morning, everyone, and welcome to Eurelectric's Power Barometer webinar. I am Marianne, Director for Business and Communications here at Eurelectric, and I will be happily guiding you through today's discussion. There is one key question that we aim to answer today. Are we, the Europe's power sector, in shape for the future? We all recognize that the journey of the European power system over the past 5 years has been nothing short of a roller coaster. But we have some good news for you today. The Power Barometer confirms that we stay committed to our decarbonisation journey with clean power sources guiding us in this journey. The Power Barometer, if you don't know, is our annual set of statistics that looks at key energy indicators, compares them to previous years, and also gives us a glimpse if we are on track to our future goals and targets. This year's study does it through a specific lens, that is the system flexibility. It is ever more crucial that we set our focus on storage, flexibility resources, and long-duration energy storage, for example, for a system that is ever more reliant on variable renewables. Today I'm joined by two of my colleagues who will be presenting and guiding us through the Power Barometer findings. Afthab Olikathodi, next to me here in Eurelectric Studio, who is the Senior Analyst for Energy and Data and Scenarios. And also joining us today is Andrea Ragno, who is an analyst and contributor to the Power Barometer. Some housekeeping before we get going. Our objective, as said, present you the main takeaways and key findings from this year's Power Barometer. For questions, we urge you to use the chat box so that throughout the session we will be collecting those and answering them in the Q&A session after the presentation. Today's session is recorded and we will be able to share you the slides and recording after this webinar. However, you would need to be registered for it so that we would have your email address to do so. Make sure, please, that you are muted when not speaking. And with that, let's look at the different thematics that we will be talking about today. First, we'll have a look at the big picture. Where is our sector going? What are the key trends that we see? And then looking into the market trends. The third part, we'll be looking at PPAs, power purchase agreements. How are they picking up and how they have been doing over the past year? And then, as said, our thematic focus on storage and flexibility. Then we look at how is electrification picking up or not? Is it stagnating? Are we growing? And what can we see as future trends? And what are the demand drivers? Are they the traditional sectors? Are they newcomers? Are they sectors that are driving the demand that were not there before? Maybe AI, data centers, and other new sectors. And lastly, we'll take a closer look to our electricity grids. How are we investing in them? Where are we spending our money? And what is more needed to strengthen our grids to stay fit for the future? And at the very end, policy recommendations driven from the results of the Power Barometer. With that, let me pass on to my colleague, Abby, who will take us to the first part, the big picture.
Thank you, Marianne, for the introduction. So let me start with the big picture of the power sector. So what the good news is basically the power sector is continuing leading the charge in emission reduction. So what I'm presenting you here is basically the comparison between power sector, manufacturing sector, and transport sector. How the emissions from these sectors have been increasing or decreasing between 2008 and 2024. You can see here clearly power sector is leading the charge. Power sector has reduced its emission by 57% compared to manufacturing sector 30% and transport sector just 7%. So what is the message here? Basically, power sector is leading our emission reductions And power sector is the low-hanging fruit if you have to decarbonize Europe. So electrify the economy and decarbonize the economy easily and efficiently. How this was possible? Look at this waterfall chart. Here, I'm comparing the electricity generation between 2023 and 2024. You can see here, coal, natural gas, and other fossil fuels have reduced their electricity generation by around 90 terawatt-hour. What sources have compensated for this decrease? It's majorly hydro and solar, which has increased their electricity production by around 40 terawatt-hour each. And nuclear, which is still the leading source of electricity generation in the EU, has increased with a stable generation of more than 31 terawatt-hour electricity. And wind, unfortunately, in 2024, there was only a marginal increase from wind electricity. Why this was so? Because we were not blessed with a lot of wind last year. So that's the reason why, despite of having more installed wind capacity, we didn't see a lot of increase in wind electricity. Now let's look at the infrastructure, basically the generation infrastructure. So between 2020 and 2024, we have increased our installed capacity by 216 gigawatt, predominantly from solar and wind. However, look at 2030, we have to quadruple what we have done in the past 4 or 5 years. And this will be predominantly dominated by wind and solar. This is a huge challenge. However, there is some good news, because if you look at 2023 and 2024, we are seeing much higher and higher increase in the installed capacity of solar. In 2023, solar PV, we had an annual installation of around 55 gigawatt, and in 2024, we have around 65 gigawatt. So that's a remarkable increase from solar PV. However, wind is also increasing. This is around 12 to 13 gigawatt last year. However, we have to reach around 30 plus gigawatt of annual installations in wind if we have to reach our decarbonization targets. Now, having talked about the big picture, the decarbonization, the infrastructure, let's look at the market trends. First, let's zoom into the wholesale electricity market. So what I'm showing you here is the day-ahead electricity market prices. The blue bar shows the day-ahead electricity prices, the average EU electricity prices, and the black line shows the average gas price. So main takeaway from this slide is basically, back in 2022, when we had the energy price crisis, the electricity price, the average electricity price was around 227 euro per megawatt hour. But now, last 3 years, you look at last 3 years, we are clearly out of the crisis. We are at around 86 euro per megawatt hour as I speak. But remember that, like, we are still we are still higher than the 2019 levels. One more takeaway here, the electricity prices are following the gas prices. So when we have a surge in gas prices, electricity prices are surging, and when gas prices came down, electricity prices are coming down. But what we say is, like, as we will have more and more renewables with sufficient flexibility, this correlation should be reducing. Let's look at a detailed picture of the electricity prices again here. So what I'm showing you here is basically the 7 days rolling average of 2023, 2024, and 2025. I would request your attention to the first quarter of 2025 and last quarter of 2024. You can see here there are spikes, right? 2024 winter was much higher. 2025 winter was much higher than 2024 winter, despite of having more renewables installation. This is where I would like to have your attention. So why this was so? Because we still have the volatility in the electricity system, and we still have the volatility in the power prices. So unfortunately, in the last quarter of 2024 and first quarter of 2025, we were not blessed with a lot of wind and hydro. And this caused a lot of fossil fuel production, fossil fuel electricity production, because of lack of flexibility, especially lack of non-fossil flexibility. So this is one of the vulnerabilities of the power system. So having talked about the volatility in the prices, let's talk about price spikes. Why we are discussing about price spikes? Because last year, especially last year and the first quarter of this year, a lot of news headlines grabbed, price spikes as a, like a very sensitive issue. However, I would argue that, like if you look at 2022, the energy price crisis period, price spikes are much, much less frequent in 2023 and 2024. So here you can see in 2022, 69% of the time we had price spikes. It's again an EU average figure. In 2023 and 2024, these figures have come down. In 2024, we had only 6.9% of the time price spikes, much, much lower than the 2022 levels, which is a good news. However, the picture is not complete if I don't speak about the right-hand side map, because it's basically showing the disparity in the price spikes in different member states of the EU. So you can see here, Eastern European countries, Baltic states, Ireland, they all have experienced much higher price spikes, up to even 12.8%. Why this was so? Basically, most of these countries have some structural vulnerability. They are more fossil fuel dominant electricity systems, but also they lack flexibility. And interconnections are still, much more required with these countries. So that is about price spikes. But there is, on the other end, we have negative prices. In the previous editions of the Power Barometer, we have been highlighting these issues. Back in 2022, we had only 0.3% of the time we had negative prices. But this has been increasing. If you look at the blue line on the left-hand side, you can see it has been increasing. And in 2025, we have around 4.7% of the time negative prices. Why this is a concern? On one hand, this is an opportunity for storage and flexible resources to have much better revenue. But on the other side, this is also a problem for assets like renewables, especially solar assets. So on the right-hand side, what I'm showing you here is the capture rates. So if you look at the past few years trend, capture rates have been dropping for solar PV assets. What are capture rates? Basically, this is a proxy to know how much revenue these assets might have been captured compared to the average wholesale electricity price. So you can see that the capture rates are going down. And why this is problematic? Because this will affect the bankability of the future projects. Because when projects have to be financed in the future, what are the reference rate for banks, to provide financing? Basically, this is the wholesale electricity market. So if there are a lot of negative prices, this kind of brings down the bankability of these projects. Also, these negative prices have clearly affected PPA markets, which my colleague will also explain in a few minutes. And finally, we talked about wholesale prices. Now let's look at retail prices, because this is something which is really affecting the end consumers, right? So a few minutes before I said, there's a clearly remarkable decrease in the wholesale prices. But you look at the blue line here on the left-hand side, which are the retail prices, including tax. Again, remember that I'm presenting EU average figures here. So here you can see between 2022 and 2024 last half, you won't see a clear reduction in the retail prices, right? Why this was so? Because although the energy and network component have reduced by 10% on an average, total taxes and levies have increased by 64%. So basically, this is the reason why retail prices have not reduced. But it is also to be noted that during the price crisis period, when the energy component really spiked, there were reduction in the taxes in the form of subsidies to give some relief to the consumers. But overall, what is the message here? Again, you look at the right-hand side. We are comparing the price components of electricity and gas, and we can clearly see that electricity is much, much higher tax than gas at an absolute level, but also at a proportionate level. So we, according to our analysis of the Eurostat statistics, on an average, we say that around electricity is taxed 1.5 times than gas. So there is an unfair taxation to electricity. So if you have to decarbonize EU with electrification, this is a clear hindrance.
Very good. Thank you so much, Abby. With that, I urge everyone to still drop your questions in the chat box. Thank you for the two questions that we already received on renewable capacity and electricity grids. We will be coming to those questions at the very end. But now let me hand over to Andrea, who is online with us, who will cover the two next sessions on PPA market and storage and flexibility. Please, Andrea, the floor is yours.
Yeah, thank you very much, Marianne. Thank you very much, Abby. So first things first, we will be showing one of the first consequences of the market conditions that Abby presented, and we'll be looking particularly at PPAs, how they've evolved in the last few years, and particularly in 2024. So what we noticed, thanks to data available on Pexapark, PPA volumes declined 11% in 2024 to 15.2 gigawatt, and for interesting reasons. So negative prices and low capture rates made utility cautious about taking on additional profile risks from industrial players. However, we're seeing an interesting, let's say, innovation, as we are seeing more multi-technology PPAs as they reached 2.7 gigawatt, adding 2 gigawatts between 2023 and 2024. And as expected, the IT sector, thanks to also right now through the build out of data centers, the IT sector continues leading the number and the volume of PPA deals. And importantly, while sustainability goals remain important for them, for the whole corporate sector, market dynamics are now the primary driver of corporate PPA decisions. So companies are becoming more sophisticated in their energy procurement. As a second consequence of the market dynamics, we will be looking at storage and flexibility. So first, we can see here in this slide how right after the 2020, as more renewables entered the system, and as expected in Europe, the ancillary service costs have quadrupled, basically, almost quadrupled, basically reaching a stable figures above 7 billion of euros in the last 3 years. And this reflects the growing challenge of balancing for all the grids from the UK to the rest of the European Union. And right now, as we do not have yet enough clean tech providing different levels of flexibility, as we can see in the next slide. If you can go to the next slide, Abby. Yes. So as I said, as we do not have enough clean tech providing flexibility within the European power systems, gas continues playing a crucial role in particularly for seasonal flexibility. And what we saw is that while annual capacity utilization of gas plants declined to 30% in 2024, the contribution to peak hours rose by 10 percentage points compared to 2023. And gas consumption in the power sector spikes obviously quite obviously spikes during winter and correlates closely with power prices. And we're not moving, we are moving away from gas, although slowly, and we are doing that more strategically. We're doing that more strategically in the European Union. Obviously, now we will be looking at another important piece of clean tech providing flexibility. So if we go to the next slide. Here we can look at the numbers of pumped hydro, which is obviously very prominent in countries such as around the Alpine region, such as Italy, Switzerland, Germany, Austria, as well as also in Spain. And pumped hydro still dominates at amongst the clean tech, the clean tech for flexibility and for storage. Pumped hydro still dominates at 50 gigawatts operational capacity, and in the future, there is an expectation, of course, to add more batteries, and obviously increase and diversify the sort of flexibility technologies that we have in Europe. And now to focus more on particularly on batteries, here we can look at let's say the conservative scenario for the installation and the currently operational volume of batteries in the EU. So battery storage, as we've seen in the last few years, and is obviously accelerating rapidly. As of end of 2024, we in Europe, according to estimates of Wood Mackenzie, we had installed 5.4 gigawatt, which was basically represented a 50% increase year over year. And projection show that in the next few years we'll reach, projections show that at the end of this year, at the end of 2025, we'll reach 13 gigawatt. And in the next few years, we'll be reaching 30 gigawatts of operational batteries installed. Germany, countries like Germany, Italy, Ireland, Poland, and Spain are leading this deployment. However, according to a study that Eurelectric did 2 years ago, the decarbonisation speedway study that was commissioned by Eurelectric, this figure, the 30 gigawatt figure, is still not enough. It's only half of the actual needs that the European grids will be facing in 2030. So there is an expectation of the more batteries will be needed to be installed. However, here what we're looking at here, and also the, let's say, the announced project, it is again a conservative estimate, given, let's say, the figures that we have available on the GRC website, which are then provided by Wood Mackenzie. So now switching on, let's say, the overall supply chain of batteries, and particularly on battery manufacturing capacities. Here we can see, for example, let's say how many batteries are being produced in Europe. So how much of the battery manufacturing capacity is made in the EU. And also what's more important to see is that how certain policies have affected the build out of batteries in other parts of the world, such as the US. So here, as you can see, the US Inflation Reduction Act has been transformative as battery investments have soared, with manufacturing capacity on track to exceed more than 1,000 gigawatt hour in the US, and in Europe we're only reaching 600 gigawatt hours. And basically, this means that the US is now almost approaching self-sufficiency in battery production. Meanwhile, Europe remains dependent on the Chinese market for upstream components. And what is actually interesting is that most of the batteries made in Europe, they're being sold then to North America, as there are more, let's say, economic and profitable opportunities by exporting those products to Canada and US, and in a few other parts of the world. And why, obviously, besides the needs for the grid, and besides the obvious need for flexibility, what we could show now in the next slide is that batteries, wherever they've been deployed, the business case depends on both price spreads that happen during the day, as well as also on the co-location with other renewables assets, whether it is solar assets or wind farms. And here, I mean, we're just providing a very quick and simple snapshot to just show you how the business case work in these two instances. And yeah, as you can see, basically pretty much, so for taking as an example, the German day-ahead market. So in August 2024, Germany saw average daily spreads of 150 euros per megawatt hour in the evening, which basically, if a battery was buying cheaper electricity around at 1 p.m. and selling it at 8 p.m. At that price, basically it will make a very high profit, as well as also we could see then on the right how co-locating batteries basically with, for example, with solar in this case, both in two different markets such as the German one, the Greek one, it can easily increase the solar capture price for this technology. So this is pretty much, let's say, the state of flexibility that we had in Europe. And now we will switch to obviously another key topic for driving investments all over the power system, obviously not just in Europe, but all over the world. And so first, let's address obviously what could be the biggest challenge. So electricity demand grew only 1% in 2024, and we're still 7% below 2021 levels. And this is highlighting this more stagnant state of electrification in Europe. And again, according to Eurelectric's, according to the Clean Industrial Deal, in order to meet decarbonization targets, we need to reach 35% of electrification in our industry, in all our industries in Europe. We need to reach this figure by 2030 and 62% by 2050. And obviously, by looking at the numbers on the left-hand side, we are still nowhere or very far from these trajectories. Now, let's looking at trying to explain why the electricity demand and electrification in general is stagnant. We'll be looking at the next slide with on industrial demand. So industrial demand in general remains depressed for the overall energy demand. So high energy costs reduced industrial final energy consumption by 5% in 2023. Unfortunately, the data for 2024 is not available. It was not available at the time of the reduction of this study. However, another piece of data which we can take as a proxy for to understand the future demand of energy demand of in particular electricity demand of our industries in Europe could be the industrial production index. And so according to this index, we are seeing some mixed recovery signals. So we have countries such as Spain, Finland, and Sweden that are showing improvement, while Germany and Italy are still facing decline. So industrial electricity demand is being suppressed particularly by three factors. So declining output, which we saw particularly was quite evident in 2024. Improved energy efficiency, which is something that the European Union is heavily investing on, has been heavily investing on, and increased self-consumption from on-site renewables as more industrial players are trying to develop their own. They're trying to become more energy self-sufficient in terms of energy by having their own energy assets. Now to look at, as I mentioned, one issue for the declining industry demand, and therefore one key topic that is basically affecting the decline in energy in the industrial production output for Europe, and is basically making European industries less competitive globally, is obviously the gas prices. So as you can see on the left-hand side, we could see that the prices for gas compared to 2018, so basically way before COVID and way before the Russian invasion to Ukraine, was 80% less of the average price that we had in 2024. And in any case, in Europe, the gas prices remain much higher than the US, the American ones. And that's one. Second, a lot of European companies to face basically this this price shock that we had with the Russian invasion to Ukraine. A lot of European companies basically decided to mitigate this risk with different strategies. However, the issue is that price mitigation strategies such as hedging and supply contracts cannot work as we will not go back to pre-war prices. So hedging with lower prices will not be possible, or like having supply contracts that are basically with low prices will not be possible in the future. So these are more temporary solutions. And finally, another temporary solution that is not sustainable in the long term for energy-intensive industries and gas-intensive industry is basically state subsidies. As you could see, basically here, the countries that gave meaningful subsidies to gas-consuming industry did not fare better than countries that did not give meaningful subsidies to gas-consuming industry. And so basically our solution, as you can see in the next slide, our solution, which obviously here again it's simplified, but obviously conceptually it's very coherent, and it can be, and it's basically what many other let's say players around the world are doing. So our solution is basically that a decarbonized and flexible grid will make basically industries in Europe competitive again. So as on the left hand side here, you can see that the average price for the average price for electricity, while the renewables share were higher than 50%, is way lower than the price when the renewable assets were not operating or were not providing 50% more, were not providing 50% more than the electricity demand. And obviously, with stronger interconnections and flexibility, we expect stable and competitive prices everywhere in the EU. And our forecast showed that industrial electricity demand, according again to this consumption, electricity demand will be growing to and reach will be growing by 36% and will be reaching 1,244 terawatt hour in 2050. With the overall energy demand decreasing as it will be offset by electricity, as well as also energy efficiency measures. So the business case for industrial electrification is there. We just need to increase, let's say, the infrastructure overall. And finally, we'll be looking at, as I briefly mentioned, what other, let's say, huge players are doing, what is the state of affairs for other big players, where the investments are going, we are being poured at. And so here we'll be looking at first the comparison between the EU and the US and China in terms of electrification rates. And obviously, as you can see, China is pulling ahead heavily on electrification. And on the right-hand side, you can see that basically China accounts for over 50% of global wind and solar sales. And the contrast is basically quite stark, particularly in batteries, where Europe has just 12% of global sales versus China having 45% and the US having 31%. And then finally, and again, another comparison between the North America, Europe, including the UK and Switzerland, as well as also China. As you could see here, in terms of investment figures, China's clean energy investments reached 624 billion of euros in 2024, which is basically more than doubled their figures in 2015. And the majority of investments in Europe has been done for energy efficiency measures, but the majority, of course, for China, for example, went towards the renewables investments. And so this basically gives us, show us how, in terms of electrification, China is setting the pace globally.
Thank you. Thank you, Andrea, for the presentation on storage and flexibility and demand and electrification. So now I'll continue with demand drivers, basically touching upon the sectors, like transport, heating, and the new kid in town, which will drive the electricity demand in the EU in the coming years. So first, let's talk about the transport sector. So here, as an indicator, what we have chosen is the annual sales of passenger car EVs and share in the total EU car sales. So between 2021 and 2023, we saw a 16% increase in the sales of passenger car EVs, which was a good news. Unfortunately, in 2024, we saw a dip of 6% in the sales. Why this was so? Like, we attribute this to several factors. One will be, like, I'll say, inconsistent policies or support schemes, which was earlier boosting the EV sales. For example, some of the member states like Germany partially or withdrew the subsidies on EV sales. Similarly, countries like France kind of took down the environmental credit or bonus that would have been that usually were given to EV car buyers, but like for high income buyers, this was taken off. So that will be another reason. Also, another driving factor for this EV sales was basically the targets, the CO2 emission target for car manufacturers. But this was a constant target between 2020 and 2024. So there was no further incentive for car manufacturers to increase the sales in 2024. So that was another reason. But good news is that in 2025, as of first half of 2025, the share of passenger car EVs have increased from 21% in 2024 to 24% in 2025. This was majorly because now there is a new target for car manufacturers to reduce the CO2 emissions of their fleet. And also in some countries like Netherlands, there is much better charging infrastructure, which is also kind of boosting the EV sales in some countries. But again, mind you, this is an EU average picture. Like, if we deep dive into like country wise, like, bad news is that basically this is still concentrated in a few member states. Especially Eastern European countries are really like lagging behind in the EV sales. And now let's look at heat pumps, heating electrification. So we look at annual sales of heat pumps. We don't have a very good picture here because in 2023 and 2024, the sales of heat pumps really reduced. One of the reasons is basically the financial barriers, because we are going through like a crisis period. So this is really not helping the sales of heat pumps, which is also, there is also an upfront investment cost. But also, like, there are inconsistent or lack of support schemes in many countries, because if you have to like boost this sales of heat pumps, in many countries, considering the annual like earnings, annual income of the people, like you have to give support schemes, but this is really lacking in some countries. Even in countries where there are support schemes, there are administrative challenges, to really get this money. So that is another barrier. And finally, which I've been speaking when I talked about retail prices, because still, electricity is perceived to be like an expensive commodity compared to other energy vectors. So that is definitely like a key barrier here. And also in some countries, still many countries, there are, in one way or the other way, there are some fossil fuel subsidy schemes, for heating. So these are the factors which is really really acting as a barrier to heating electrification. And now let's talk about data centers, because this is something new, right? We have not been talking about data centers in the past few editions of the Power Barometer, but you will see that on an average in 2024, data centers was around only 3% of the total consumption in 2024, but we'll see much higher increase in the next 3-4 years. So we are going to see around 2.5 times increase in the data center IT load capacity by 2030. Why this was so? One reason majorly it's AI, because now there is a lot of boost in the AI, and all of us know that the electricity consumption of the AI is really high. That is number one. But number two, it's also about like many companies are now outsourcing their storage to like kind of cloud services instead of hosting in their own spaces. So this is also boosting the electricity consumption from data centers. But there are some details here. For example, if you look at the countries like Ireland, already around 20% of their electricity consumption is dominated by data centers. And you will not see much increase in the data centers capacity in these countries. You are not seeing a lot of green part in Ireland because this is kind of saturated. But now going forward, there is a trend that there is a foreseen trend that many data centers could be located in countries which are having a favorable electricity prices, like Nordic countries, Spain. You can clearly see here, for example, Spain, how much increase you will see in the capacity. But also at the same time, don't expect all data centers can be located in some remote location where there are also like low electricity price, like northern Sweden. Because for latency reason, some of these data centers must be located near the demand centers, because that will affect the speed of the internet. So this is all about data centers capacity. But what about the absolute level? How many additional terawatt-hour electricity will be demanded by data centers by 2030? We looked at different forecasts, different projections, European institutions like JRC, like consultants, financial institutions, etc., etc. And then we saw a broad range. It's really like it's between 150 to 300 terawatt-hour of increase in the electricity consumption from data centers. To put these figures into perspective, 150 is approximately Poland, an additional Poland coming to the electricity mix of the EU, or 300, which is Spain, like approximately. So this is going to be a really huge increase in the data centers electricity consumption, but there are also a lot of uncertainties around that, because also like a lot of this data is really kind of confidential. So this is again an estimate. So having talked about the electricity demand drivers, having talked about the big picture prices, but this will never be complete without talking about grids, right? Especially the distribution grid. Because by 2030, like around 70% of the renewables which we'll be having on the grid will be connected to distribution grid. So we surveyed our members who are, like also distribution system operators on several parameters on the distribution grid, their assets, their investments, etc. And we'll like what we have found out is basically that distribution grid is under strain, because now there is much more demand for prosumers connection, renewable requests. Just to give you some examples. So on prosumer connections, we have seen a 142% increase in the connection between 2021 and 2024. And renewable requests have increased by 133%. So this is a remarkable increase. What this means? This means that you need more and more investments in the distribution grid. So I think I have seen one question related to that in the chat. So basically, we looked at the investments pouring into the distribution grid. Good news is that between 2021 and 2025, we saw a 59% increase in the distribution grid's investments. And we, like 1.5 years ago, we had done our grids for speed study. We tried to estimate, how much of investments will be required in the future. So what we have estimated was around 67 billion euro annual average investments are required in the distribution grid. If we can follow the so-called anticipatory investment strategy, basically, like anticipating what will be coming in the grid and kind of investing in advance, we could bring this investment down to 55 billion euro. So good news is that investments are increasing, but still, like we have miles to reach, like our targets. So this is definitely a big challenge. So a lot of figures in front of you, a lot of things to digest. So let me summarize with our policy recommendations. So first, on the demand side, which we have been highlighting, there is a real concern. The electricity demand is not really increasing. The electrification is not really going up as much as it is required. So we have to stimulate this electricity demand. What we have to do, deliver the electrification action plan with clear incentives to electricity, with clear signals to electrify. And second one, accelerate fleet electrification. Basically, right, like in the transport sector, much higher EV sales is actually attributed to like corporate fleets. And this we have to, it's kind of a low hanging fruit. So we have to accelerate this fleet electrification, and finally scale up industry electrification. So because we can't, this is not just about decarbonization, this is also about competitiveness, right? We can't get rid of our industry from here and decarbonize. We need some industries here, and these industries, as my colleague was explaining, there is a clear case to electrify, if they have to get rid of the volatility from the fossil fuel commodity prices. So basically scale up this industry electrification with sufficient support schemes. And finally, on the supply side, as I was talking, we have to invest in infrastructure, both in generation infrastructure, but also in the grid infrastructure. And we need to prioritize flexibility. So this has been the thing which we are highlighting in this year's Power Barometer, because yes, with renewables, the electricity prices are coming down, or the volatility will come down. But like if you don't have the flexibility, especially the non-fossil flexibility, like we'll still have a lot of vulnerabilities and volatility in the prices. So we have to prioritize this flexibility. And finally, we do have a market design which was revised recently, but this has to be implemented. So we have to complete internal market reform. This is still lagging behind in many of the member states. So overall, this is our policy recommendations, but like there are position papers, concrete recommendations on our website. So please follow this to get more details. So I'll stop it here, and maybe, Marianne, we could take some questions.
Absolutely. And I want to thank you, Abby. Thank you, Andrea, for presenting the key data from the analysis. We have already received questions in the chat. We will be taking them up and then grouping some that are related to same topics. And while we do that, you're still able to submit more questions in the chat box. Now, the latest kind of focus was on grids, and you told us, Abby, that we already over the past year see 59% increase in the investments into the grids. But the question still remains for me is that are the grids keeping up with the pace that is required from them, or they're lagging behind what comes to, for example, generation needs, maybe connection requests, and there was also a note about the smart meters, for example. So overall, are we doing well when it comes to grids, or we still need to push the pace?
Thank you. That's a very interesting question. I can't give really yes or no answer there, but I'll say, still, we might have to keep up the investment, because when I say like, okay, we need more investments in the grid, there are different types of assets, there are different types of investments. In our study, we looked at, like there are demand-driven investments, basically the investments that would be required due to more and more charging infrastructure, heat pumps in the grid. For that reinforcement, we need more investments. We need supply-driven investments. Basically, like when we need to have more prosumers connecting, we need to support them. We need more investments, and definitely we need digitalization and modernization investments, especially like smart meters. Because if we need flexibility, what are those flexibilities? There is supply-side flexibility, but there is also demand-side flexibility. If we need demand-side flexibility, we really need to digitalize and modernize our grid. So I would say, yeah, maybe I'll say like we are still, lagging behind, but we are doing good in, many aspects because we are increasing these investments. But maybe one area of concern for me would be the digitalization and modernization. Definitely, like our DSOs are trying their level best, to keep up. But, like, for example, let's talk about smart meters. What is the smart meter penetration rate in the EU right now? It's still around 60%. There are countries with 100% smart meter penetration rate, like Nordic countries, Italy, there are countries like that, for those countries, it would be easy to kind of implement, this demand side response. But, for example, countries like maybe Belgium, Germany, like the smart meter penetration rate is really low, like I think it's even less than 5% or 3%. It's really low. So in those countries, how can we, like foresee a lot of demand side flexibility coming up without, this basic infrastructure requirements? So we still have to do a lot, I would say. But I will also not say that we are not doing great. We are doing, we are trying to reach there, but like still we have a lot of gaps.
Work to be done.
Work to be done.
Okay. Good. And another question received on the grids was about the supply chain for critical grid components. Did you do any investigation there? What is the outlook? And do you anticipate current bottlenecks or cost volatility that will delay the investments into those critical grid components?
Yeah, in this year's Power Barometer, we haven't done like a detailed analysis of this segment. For example, last year I could say, like we were really raising the alarm there, because, for example, copper price, it was between 2020 and 2025, the increase in copper price was really kind of 2.5 times, if my memory is correct. And this is really a bottleneck, like for some of the components like transformers and so there was supply chain bottlenecks there. But I think we'll have to, like again, this is more about our colleagues working on the DSO topics. But like at least this year's Power Barometer, we haven't looked deeply into that, but there are some concerns, on the price increases there on the supply chain.
And another question in the chat about connecting the dots between grids and data centers. Do we see that the data centers are contributing towards the grid upgrades, modernizing the grid, investing into grids?
Yeah, so actually we try to look at what are the challenges, because of data centers, and we were looking at Ireland, because Ireland is a country with around 20% electricity consumption attributed to data centers, and there. What we have noticed as of now, okay, the situation could change. What we have noticed is like the challenges right now on the transmission grid. And we have seen, there are sometimes, because of data centers consumption, there were some, like faults reported in the grid, like there is like sudden up and down in the voltage. So there was some fault detected, but that's more in the transmission grid. So there was some challenges reported because of data centers. And definitely data centers will also, because drive the investments, in the grid. But again, like, yeah, what I have presented was more aggregate level data centers electricity demand, but this local stress, because as I said, data centers is currently located in a few clusters. We call it as flagged, some cities like Frankfurt, Amsterdam, Dublin. So these are located in some clusters, and this is really creating stress on the local grid. So definitely this will also be one of the drivers to like reinforce and build more grid. Yeah.
Understood. Very good. And then we received several questions about ancillary services, and specifically, what is driving up the cost for them? is it that the subsidy streams are playing the role, or is it in the increase in gas prices that are driving up the cost, or is it actually a greater need for these services? And another question about ancillary services is that is the cost for redispatch included in the cost for ancillary services? And if so, do you know the distribution between transmission system and distribution system operators?
Yeah, so I'll start, and Andrea, please compliment if you feel like I'm missing something. So on ancillary services, as Andrea was explaining, this is a data we have collected from LCP Delta. Thanks to LCP Delta for this collection, this data. And basically, this doesn't include redispatching costs. That is another category. So that is answer to one of the questions. And that's another question on gas was interesting because, yes, we can clearly see that, like there is one major factor of commodity prices here, especially gas prices. That's why you clearly see in 2022 the ancillary services are really going up when we saw the gas prices up. And we haven't we haven't done a separate exercise to attribute which element has cost how much increase. We haven't done so, but yes, commodity prices have caused an increase, but at the same time, as we have more and more renewables in the mix, this is also creating kind of uncertainty for the planners, the TSOs, about some voltage change, frequency change, and this is also resulting in a bit more, procurement for these frequency restoration services, etc., etc. So I would argue that both commodity prices, especially gas prices, and also at the same time increase in renewables have caused ancillary services to increase. But I'll not say that subsidy schemes for renewables have caused this to increase. I would say we should be planning properly going forward. We have to foresee that we'll have more and more renewables. At the same time, we'll need flexibility. But then, one major thing is basically traditionally our power system was having a lot of rotational inertia because of rotational traditional power plants. But now, since there is solar, which is basically we need inertia also in the power system. So it might be synthetic inertia from grid forming inverters. So these considerations must be there in the planning. So that's what I would say. But I would not say subsidies in the for the renewables kind of caused this to increase. I have not say. But I think Andrea may be having some additional explanations.
No, yeah, I mean, no, Abhi, you explained almost everything. I just really wanted to add that qualitatively speaking, because indeed we didn't go as deep as to say, okay, gas increased X amount of TSO cost in this year rather than the other year and so on. So obviously on the more quantitative side, we do not have a specific answer, but I would say that qualitatively there is a correlation of the fact that as gas plants, as well as also coal plants are being used more for flexibility, as well as also particularly gas plants for some auxiliary services. Obviously, they do bring higher prices and therefore higher cost, as of course there is still the merit order curve to finalize, to determine the prices for the majority of ancillary services, and therefore as I said, there is a lot of gas plants that can help towards this need from the grid. Therefore, they do bring higher prices because they have a higher marginal cost. So again, qualitatively, yes, I would say yes, there is a good correlation that the costs are higher, also because commodities in Europe are higher because they contribute to ancillary services. However, it would be indeed interesting to try to pinpoint a specific let's say data point to understand how much. But yeah.
Okay, very good. We have unfortunately come to the end of the time allocated for this webinar, but I would like to sincerely thank Abi, my colleague, and our external contributor, Andrea, for presenting the slides and findings of Power Barometer 2025. We will share the slides with you together with the recording after this session, but we also kindly ask you that if you use those statistics anywhere online in your own reports, that you reference Eurelectric or tag us on social media accordingly. And let me just use one last minute of today's webinar to highlight a very special colleague of ours, ELDA, which stands for electricity data. It is our data assistant in-house that has its own dedicated platform. You can scan the QR code or go directly to the website shown on the slide here. This is where Eurelectric gathers and updates real-time specific data sets across Europe and specifically on European countries on electricity prices, generation mix, etc., etc. We are continuously building ELDA. It matures over time, and there will be specific data sets also added to the platform for Eurelectric members. And with that, thank you everyone for joining. Thank you, Abi, once again. Thank you, Andrea, and everybody who were joining this session today. I will see you soon and have a good end of the year.